I will now move to inflation. CPI headline inflation continued its declining trajectory in both March and April. The headline inflation moderated to a nearly 6-year low, in fact 69 months to be precise, to 3.2% in April 2025. This was led mainly by food inflation, which recorded the 6th consecutive monthly decline. Fuel group, which had been earlier witnessing deflationary conditions, there was a reversal of the deflationary conditions, and it has recorded positive inflation prints in the last 2 months of March and April. This is partly because of the hike in LPG prices. Core inflation remained largely steady and contained during March and April, and this is despite the increase in gold prices, which exerted an upward pressure. The outlook for inflation provides towards benign prices across major constituents. The record wheat production and higher production of key pulses in the Rabi crop season should ensure adequate supply of key food items. Going forward, the likely above normal monsoon, along with its early onset, augurs well for Kharif crop prospects. Reflecting this, inflation expectations are showing a moderating trend, and this is more so for the rural households. Most projections point towards continued moderation in prices of key commodities. This includes crude oil, which is of critical significance to us. Notwithstanding these favorable prognoses, we need to remain watchful of weather-related uncertainties and the still evolving tariff-related concerns with their attendant impact on global commodity prices. Taking all these factors into consideration and assuming a normal monsoon, CPI inflation for the financial year 25-26 is now projected at 3.7%. As I mentioned earlier, this is a downward revision from our earlier forecast of 4%. We are projecting inflation for Q1 at 2.9%, Q2 at 3.4%, Q3 at 3.9%, and Q4 at 4.4%. The risks are evenly balanced. I'll now come to